Welcome back, looters. I am your host on Tick to Loot, the channel where we turn ticks into treasure. Today we are on Lesson 11.8 of Unit 11, Algorithmic Trading Fundamentals. In this lesson, we're going to cover what latency in algo execution means, why it matters for traders, and how to apply it in a practical way. We'll also discuss common mistakes and how latency connects to risk management. By the end of this video, you'll understand the importance of latency in algo execution and how to use it to improve your trading. Let's get into it. Latency in algo execution is essentially the delay between the time your trading algorithm sends a signal to buy or sell and the time the trade is actually executed. This delay can be due to various factors, such as internet connectivity, server response time, or even the speed of your computer. It's crucial to understand latency because it can significantly impact your trading performance. Imagine you're trying to catch a bus, but you're running late. If you miss the bus by just a few seconds, you'll have to wait for the next one, which could be a long time. Similarly, in trading, if your algorithm sends a signal to buy or sell, but the trade is executed late due to latency, you might miss the opportunity or even end up with a bad trade. So, let's dive deeper into this concept and explore how it works in real-world trading scenarios. To understand latency in algo execution, let's consider a simple example. Suppose you have a trading algorithm that monitors the price of the euro to US dollar currency pair. When the price reaches a certain level, say 1.1000, the algorithm sends a signal to buy. However, due to latency, the trade is not executed immediately. The signal is delayed by a few seconds, and by the time the trade is executed, the price has already moved to 1.1005. This means you've missed the opportunity to buy at the desired price, and you've ended up with a worse trade. This is just one example of how latency can impact your trading performance. In the next scene, we'll explore a real-world example of latency in algo execution in action. Let's consider a real-world example of latency in algo execution. Suppose you're trading the euro to US dollar currency pair, and your algorithm is set to buy when the price reaches 1.1000. However, due to latency, the trade is not executed until the price reaches 1.1005. This means you've missed the opportunity to buy at the desired price, and you've ended up with a worse trade. In this example, the latency was caused by a slow internet connection. The signal was sent to the broker, but it took a few seconds to execute the trade. This delay resulted in a worse trade, which could have been avoided if the latency was minimized. In the next scene, we'll discuss the most common mistake beginners make with latency in algo execution. The most common mistake beginners make with latency in algo execution is ignoring it altogether. Many beginners assume that latency is not a significant issue, and they don't take steps to minimize it. However, as we've seen, latency can significantly impact your trading performance. Ignoring latency can result in missed opportunities, bad trades, and even significant losses. It's essential to understand that latency is an inherent part of trading, and it needs to be addressed. In the next scene, we'll discuss a practical step-by-step way to apply latency in algo execution. So, how can you apply latency in algo execution in a practical way? The first step is to assess your internet connectivity. Make sure you have a fast and reliable internet connection. The next step is to optimize your trading algorithm. Use techniques such as caching, buffering, and parallel processing to minimize latency. The third step is to monitor latency. Use tools such as latency meters and network monitors to track latency and identify areas for improvement. By following these steps, you can minimize latency and improve your trading performance. In the next scene, we'll discuss how latency in algo execution connects to risk management. Latency in algo execution is closely connected to risk management. When you're trading, you're exposed to various risks such as market volatility, liquidity risks, and execution risks. Latency can exacerbate these risks by delaying trade execution, which can result in significant losses. Therefore, it's essential to manage risk by minimizing latency. By optimizing your trading algorithm and monitoring latency, you can reduce the risk of bad trades and minimize losses. In the next scene, we'll discuss a real-world case study of how latency in algo execution impacted a trader's performance. Let's consider a real-world case study of how latency in algo execution impacted a trader's performance. Suppose a trader was using a trading algorithm to trade the euro to US dollar currency pair. However, due to high latency, the trader was experiencing significant losses. The trader then optimized their trading algorithm by minimizing latency, and their performance improved significantly. This case study illustrates the importance of latency in algo execution and how it can impact a trader's performance. In the next scene, we'll discuss common beginner mistakes related to latency in algo execution. Common beginner mistakes related to latency in algo execution include ignoring latency, using slow internet connections, and not monitoring latency. These mistakes can result in significant losses and poor trading performance. It's essential to avoid these mistakes by optimizing your trading algorithm, using fast and reliable internet connections, and monitoring latency. By doing so, you can minimize latency and improve your trading performance. In the next scene, we'll discuss a step-by-step walkthrough of how to optimize latency in your trading algorithm. To optimize latency in your trading algorithm, follow these steps. First, assess your internet connectivity. Make sure you have a fast and reliable internet connection. Second, optimize your code. Use techniques such as caching, buffering, and parallel processing to minimize latency. Third, monitor latency. Use tools such as latency meters and network monitors to track latency and identify areas for improvement. By following these steps, you can minimize latency and improve your trading performance. In the next scene, we'll discuss the importance of latency in high-frequency trading. Latency is particularly important in high-frequency trading, where trades are executed in fractions of a second. In high-frequency trading, latency can mean the difference between a profitable trade and a loss. Therefore, it's essential to minimize latency by using fast and reliable internet connections, optimizing trading algorithms, and monitoring latency. By doing so, you can improve your trading performance and stay competitive in the markets. In the next scene, we'll discuss a real-world example of how latency in algo execution impacted a high-frequency trader's performance. Let's consider a real-world example of how latency in algo execution impacted a high-frequency trader's performance. Suppose a high-frequency trader was using a trading algorithm to trade the euro to US dollar currency pair. However, due to high latency, the trader was experiencing significant losses. The trader then optimized their trading algorithm by minimizing latency, and their performance improved significantly. This example illustrates the importance of latency in high-frequency trading and how it can impact a trader's performance. In the next scene, we'll discuss the key takeaways from this lesson. In this lesson, we've covered the importance of latency in algo execution, common beginner mistakes, and practical steps to optimize latency. We've also discussed the connection between latency and risk management and how latency can impact a trader's performance. The key takeaways from this lesson are to always consider latency when trading, to optimize your trading algorithm to minimize latency, and to monitor latency to identify areas for improvement. By following these principles, you can improve your trading performance and stay competitive in the markets. In the next scene, we'll conclude this lesson and provide a call to action. That is everything for Lesson 11.8, Latency in Algo Execution. If this helped you, smash that like button and subscribe to Tick to Loot so you never miss a lesson. Drop a comment below. What was the most useful thing you learned today? See you in the next lesson, looters. Keep turning those ticks into treasure. Don't forget to check out our other lessons on algorithmic trading and risk management to improve your trading skills. Thanks for watching, and we'll see you in the next video.